Hello everyone, welcome back to the channel. It is possible for you and I to trade the same strategy, trade the same pair, risk the same amount on a trade, and at the end of the day, I'll end up with bigger wins or with bigger risk to reward than you. This is largely due to the type of order block entry. Right now, a lot of people have no idea what an order block entry means. So once they see their setup, they just just pick an order block and just execute the trades, right? And I'm not saying that is wrong, right? But you can actually make more from a winning trade than what you are actually making, right? If you know how to use a proper order block entry. So this is what I'm going to be explaining to you guys in this video. If you look closely, if you look at my screen, you're going to see I use two different order block entries for these trades, right? As a matter of fact, I posted this trade on my Telegram channel for my Telegram community last week, and we made good profits, right? So, guys, if you're new to the channel, please go ahead and click on the subscribe button, and also, click on the like button just to help the channel grow, right? Thank you so much. So, without further ado, let's dive into the video. So first, what is an order block, right? Let's understand what an order block is, right? An order block is an area of manipulation, right, where liquidity or yes, where liquidity is pumped into the market, right? Let me just try to make it simple, right? Another block is an area of manipulation where liquidity is pumped into the market, leading to an impulsive move, right? So whenever you see price move impulsively to break structure like this, something is usually responsible for it. An order block is responsible for this push to the upside, right? So an order block is a liquidity zone. An order block is a liquidity zone, right? It's a zone where orders, right? Orders are stacked, right? Orders are stacked here. For example, this zone that was responsible for this push to the upside, price is likely to come back, revisit this zone before another push to the upside, right? In most cases. So this is why order block is very, very important, right? But I'm not going to go deep into, order block, explain the valid and, invalid order blocks. Probably I'm going to make a video explaining invalid order blocks and valid order blocks, right? But one thing you should have in mind when dealing with order block is your order, before you select an order block to be valid, ensure that that order block sweep something, right? Ensure that order block seeks out liquidity, right? Ensure that the order block sweeps liquidity before you consider that order block to be a valid order block. Else, price might likely take you out, right? Another block is more solid when there is a sweep of liquidity before a break of structure, right? Or before a change of character, right? So just keep that in mind. But that's not what we are doing today, right? We are not dealing with valid order blocks or the characteristics of valid order blocks today. Today is just to show you the different types of order block entries, right? Because I wouldn't want this video to be so long. So let's quickly look at the type of entries we have, right? The number one is the whole body, right? The whole body. The whole body of the candle, right? The whole body of the candle. Now let's use for if you look at this trade that I took last week, look at this last week trade. I actually used the whole body of the candle, right? You can go to my Telegram channel and check out that trade. You're going to see it, right? If you're not on the Telegram channel, I'll leave a link in the description so you can join the channel, right? So this trade, I used the whole body of the candle, right? And we actually, it was a 1:5 trade. It was a 1:5 trade, right? We got a 1:5 out of this trade using the full body of the candle. So this is the first order block entry, right? You mark out the whole body of the candle and then you place your sell position, right, at the tip of the candle, and then you cover the body of the candle, right? You cover the whole body of the candle, and you use the end of the candle or the high of this candle of this order block as your stop loss, right? And you get good profit. You get good profit. Also, the second type we have is using the wick. right? Using the wick of the candle, right? Using just the wick of the candle. Now, guys, when you have a situation like this, right? Let's say this is let's say this is our this is an this is, let's say this is our order block now, for example, yeah. And then we have something like this. We have the wick this way, right? We have the wick this way. We have the wick more than 50% of the whole candle, right? If the wick is more than 50% of the whole candle, it means the liquidity is at the wick, not at the body of the candle, right? So if you select this whole candle, for example, right? If you select this whole candle, most of the time you're going to have a very wide stop loss, right? You're going to have a wide stop loss this way, right? And then you're going to, let's say, you place your buy position at the tip of the candle, right? And then you cover this low here, right? And let's target a 1:3 trades, which is my favorite risk to reward, 1:3. Let's say you target a 1:3 this way, right? Of course, trade is going to come. The trade is going to come here, give you a good reaction, and give you a take profit and all that. But imagine someone that understands order block entry, and the person is using the wick, right? Using the wick as an entry and not the body, right? Now the same 1:3 we just took here, the person decides to use the wick, right? The same trade, but the person is getting 1:5 while we are getting 1:3, right? So we are risking the same amount using the same strategy, but the knowledge of the order block entry has given the person more wins, right? And if this person go ahead to take 10 or 20 trades like this, trust me, that person would have made twice or even three times the money you are making, right? So you can imagine how effective this is, right? So whenever you see your order block, you see that the wick is more than 50% of the whole body, use the wick as your entry, right? And not the body of the candle, right? So that's that for the wick. The third one is the body, using just the body of the candle, right? The body of the candle and not considering the wick. Remember this second scenario, we are using the wick, right? This third scenario, we are using just the body of the candle. Now look at this trade I took here, right? Look at this trade I took. I used the body, right? I did not consider the wick, right? I used the body as my entry. Now, if you look at this candle here that I use as my order block, right? You saw that this candle, this is the full body, right? This is the whole candle, right? This is the whole candle. But I did not consider this zone. I only used the body of the candle, right? I ignored the wick, right? And used the body of the candle. And look at that. Price came in, tap into the body, and gave me a very good trade. Now let's target a one ratio, let's say 1:5 trade here as well. Let's target a 1:5 now. For someone that used the whole candle, right? For someone that used the whole candle, got just 1:3, right? And I got 1:5. So you can see how effective this strategy or this entry type is, right? Now, the last one you want to consider is 50% of the candle, right? 50%. 50% of the candle. This means you measure the whole candle and just use 50% as your entry. For example, this candle here, for example, this other block here, as an example now, you can just decide to measure 50% of this whole candle, right? Let's say 50% of this whole candle, and you take the trade. Now, the downside of this 50% is sometimes you're going to be missing trades, right? But whenever you catch a trade, it's going to give you a very good risk to reward ratio, right? Now, remember when I used the body and I got 5%, I used the whole candle and I got 3%. But using this 50% now, we are getting 7%, right? Or so, sorry, 7 risk to reward, right? So you can imagine that this is even more twice the risk to reward that someone that used the whole candle got. So you can imagine, that's why I always say we can use the same strategy, we can use the same, analyze the same pair, but we end up with different risk to reward. So guys, I hope you found value in this video. Please, if you did, go ahead and click on the subscribe button and also click on the like button as well. I'm going to leave a quiz in the comment section to test your understanding of this concept. See you in the next one, guys. Peace.